Okay, so in the previous session we have discussed regarding the current ratio, quick ratio, and as well as the cash ratio. You have done some questions even, but you have come across one concept of working capital. Okay, so I'll just clarify what that working capital is. So working capital can be said as current assets minus current liabilities, or net working capital is also called as net current assets. So net current assets is nothing but when you deduct all the current liabilities from your current assets, okay, you get net current assets, and that net current assets is nothing but working capital. This is formula wise. Now concept wise, see, working capital is nothing but it is such fund which is utilized by the businesses to run their daily routine activities smoothly. So to run the daily activities smoothly, businesses require certain funds. That fund is nothing but the working capital. Now, coming to this, let's suppose there is a business. Okay, so this business has some expenditures on daily basis, like they hire labor for loading unloading of goods. So this is one of the expenditure which they have on daily basis. Daily basis they buy some some provisions or some inventory for their shop, buying. So they require funds for that, buying inventory. See, inventory can be bought either on cash basis or on credit basis. If they bring on cash basis, they require funds. If they bring on credit basis, they should have funds to repay that. Okay, that's a secondary matter. But first thing is they have to pay like charges to labor. They buy goods on daily basis, so we can say inventories. And then like they have some petty expenses like delivery charges, delivery delivery expenses, we can say. They deliver goods to their customers, and for that they are incurring fuel charges, and they pay to the driver on daily basis. So that also comes under labor charges, but a different kind of labor, correct? Then they pack the like goods whatever they have, so packing expenses. So all this packing material expenses, so they have all these expenses which are routine expenses which they have to spend on daily basis. So for that they want what? Funds. Those funds are nothing but what we call it working capital. So how it goes? See, they will be spending money on daily basis. They have some reserve funds with them or cash. So they'll be utilizing that cash from the cash account and meeting all these expenses. Okay. Ultimately, this is nothing but a current asset. And every day then what they'll be doing, they'll be selling goods to people, they'll be generating revenues, and then whatever they have spent, they will be kind of recovering that money, and again they'll be depositing in this account. Correct or wrong? Please tell me yes or no.
Yeah.
Yeah. And it is not only the cash what they are using. If they don't have cash, they can use their overdraft facility. They can take short term loans for that. Correct. So these are liabilities, and this is nothing but asset. Okay. And they can also like sell goods on credit basis to their customers. That is something but receivables. So but since they are waiting for 1 month of time to get money from their receivables, for that 1 month of time they are spending money from their account, okay, which they have to recover and again put back in this account. Correct. So at the end, when we see all these things happening, cash going out from our accounts, again we are filling up cash in our account either by taking overdraft facility, either by taking loans, or whenever the money we are supposed to receive from receivables, the money will be receiving after 1 month, which we have given credit to our customer. At that point of time we have to run our business. So again we will be using loans or overdraft or cash which we have in our hands, and after 1 month we will be again putting the money which we will be getting from receivables in this cash account. So what are you understanding? We are spending, we are recovering, we are spending, we are recovering. Either we will be recovering in future, either immediately we will be recovering. If we recover in future, that is current asset. If we recover immediately, that is cash. Am I right? Please tell me yes or no. Please.
Yes, sir.
Yeah.
Yeah.
And then we will be paying in the future. or else we'll paying right now. Okay. So when we see these are liabilities, payables are liabilities, paying right now is cash. Receivables are assets, and paying right now, getting cash right now is also asset. So when we see at the end, ultimately what are we doing? We are
Cash.
spending, recovering, spending, recovering, spending, recovering. So money is going out, coming in, going out, coming in. So if we see at the end, when we deduct current assets minus current liabilities, ultimately we are left over with some funds. That is what we are using on daily basis. Am I right?
Yeah.
That's what. That practically it means that. Now, so when you see a question regarding working capital, you have to use that formula and find out the answers. Now, we are starting some new set of ratios today. We are discussing about the profitability ratios. So I'll be taking you slowly, steadily deeper into the subject now. Okay, in general, I'm speaking about some profitability ratios. That is gross profit ratio, operating profit ratio, net profit ratio. Okay. So what do you mean by gross profit ratio? Gross profit ratio is nothing but gross profit by net sales into 100. First the formula. What is operating profit ratio? Operating profits by net sales into 100. Formula number 2. What is net profit ratio? Net profit by net sales into 100. Formula number 3. So if these formulas are all right, now I'll explain you the concept behind this. But for that I'm making an income statement. Please follow. So it starts like this. Revenue. Revenue is something less COGS will give you gross profit. Okay. Now, how this concept we have to understand is, first of all, understand the formula for COGS. COGS is opening inventory plus purchases minus closing inventory. Okay. This is the formula for COGS, and I will justify you that with the help of an example. Suppose you bought 100 boxes, correct? Is it necessary that you will be selling all the 100 boxes every time? Now the answer is, yeah, there can be two possibilities. It is also possible. It is even not possible. Yeah, I can sell 100 boxes also, and there will be some times whereby I'll be selling only 80 boxes. So 20 will be left over with me. Are these two scenarios possible? Please tell me.
Yes.
Yeah. So if you sell 100 boxes, let's say, each box has costed you $12. So 1200, and you bought it for $10. So 100 into 10, you incurred some $1000, and your gross profit is $200. Very simply understood. Correct? This is the sales, this is the purchase or COGS, and this is the gross profit. But I am speaking about some gross profit in a broader sense. So I'll just calculate it in this way. In this example, no closing stock or inventory. But what if you bring 100 boxes and you sell 80 boxes? Bought 100, sold 80. So there is a closing inventory of
20.
20 boxes, correct? So this is closing inventory. Now, we will try to understand this concept. So revenue, we will take, we sold how much? 80 boxes. So 80 into 12, 960, correct? Less COGS. Let's say opening inventory is nil in our case. Okay. So I take opening inventory nil. Purchases. How many boxes I am selling here? Of course, I am selling 80 boxes. So definitely this revenue I need to match with the revenue of 80 boxes. I have to match with the cost of 80 boxes, but I bought 100 boxes. So I'll take 100 into 10. I bought it for $10, correct? So it costed me 1000. Isn't it so? But less closing inventory. How many boxes I did not sell?
20.
20 into 10, so 200. Isn't it so? Am I right or wrong?
Yeah.
I purchased 100 and I am left over with 20. So I sold how much? 80. So now the cost I have to see for 80 only, na? That is what it will be compatible, correct? So it comes around 80 boxes into 10, 800. Ultimately, it's the same thing am I doing? Correct? Now this 900 minus this 960 minus this 800 is giving you 160 of gross profit. Am I right or wrong? Yes?
900 minus 800.
Yeah, this two I have just taken here, this figure. 160, correct? Please tell me yes or no.
Yes, sir.
Yes,
Yeah.
that's what. Now, please note down all these points. Again, I'll give you some more explanation.
So explain this sum one more time, okay?
Yeah, you write it. Again, where you are not finding issues, you tell me, I'll explain. You want this explanation once again?
Yeah.
See, 80 boxes is what you're selling at the rate of 12. That is 960. This is your selling price. And you bought that, actually you bought 100 boxes, correct? But you're selling 80. So I'm taking purchases as 100. My opening inventory is nothing. Okay. I'll write it. I'll just write it here. My, like, I'm selling 80 boxes. I bought 100, but I'm not selling how much? 20. So I'm selling 80, na? So
Yeah.
if I'm taking the price, selling price of 80, I need to take cost price of 80 to compare to get the profit, correct? Because SP of 80 minus CP of 80 will give me profit of 80. Isn't it so? That's understood fact. So opening inventory is nil. 100 boxes I purchased, which costed me 1000. But 20 boxes are left over with me. That means 200 worth of goods I'm not selling. Correct. So I'm selling how much worth of goods? 80 boxes or 800 worth of goods for how much? 960. So I will get a profit of 160 or not? That's it, naturally.
Okay.
Now from starting, make note of everything. Fast.
Yeah.
We have other issues. We'll discuss.
Just scroll down, sir.
Yeah. Once done, please confirm.
Okay.
Yeah.
Thanks.
Okay.
Yeah. So, like gross profit is pretty clear, but gross profit ratio has to be clear. So ratio simply understood is, as I said you, like I'll take this simple example. See why we want to know the profitability. The profitability ratios are the indicator of company's performance. Isn't it so? So now what is this going to tell you? This ratio going to tell you, and this ratio going to tell you. This ratio is going to tell you from the core activity or prime activity of the business, what profits the business has generated. Correct? Correct? Isn't it so?
Yeah.
So if I say core activity or prime activity, if manufacturing is my prime activity or core activity, then I see how much from that activity itself I'm earning. Let's say revenue is $1,000, COGS is $800, let's say $600. Now if I give you a statement, gross profit is $400. If I write a statement, gross profit is the excess of revenue over COGS. Will you agree with this point or not? I don't know whether someone has given you this definition or not, but is it a simple way to understand excess of revenue over COGS? Please tell me yes or no. Hello?
Couldn't get, sir.
Sorry?
I couldn't get it.
See, your revenue is, see,
1,000.
what is your gross profit? $400.
400.
That is nothing but your revenue is excess of your COGS by how much?
400.
$400. Your revenue is how much? $1,000. Your COGS is how much? $600. How much your revenue is more than your COGS?
400.
400.
Yes, Suman, tell me.
Yeah, 400.
Your revenue is more than your COGS by $400. That's an understood fact.
Okay. Mm-hmm.
But this is gross profit. Why gross profit? Because I said you are earning from the prime activity of your business. Okay, prime activity is nothing but the direct expenses is what all you're considering here. Direct expenses which you're incurring to run your business, or if manufacturing happens to be a prime activity for your business, so all the expenses related to manufacturing you're taking into consideration to get gross
Is
profit.
that?
But do you think only your manufacturing expenses what the expense you are going to incur to run your business? No, you're going to incur some administrative, okay, administrative, operating, or selling and distribution expenses even. Correct or wrong?
Yeah.
Yeah.
Of course, because this is not the this is not our destiny, or sorry, destination. Sorry, this is destination. Our destination or a final point where we want to reach is net profit. That is what matters for a businessman. But we are still happy. Why? Because in the first stage itself, that is the manufacturing expenses, which are the manufacturing activity, which is a prime activity for our business. In that, from that activity itself, we are able to earn a profit of $400. Correct or wrong? If
Yeah.
we earn profits from this core activity, it's an indication that if we are incurring some expenses in the future, and those expenses, if we are able to absorb easily, then definitely we can reach to a point whereby we'll be earning net profits. What do you mean by absorption of expenses? You should have enough profits to pay off your expenses. Correct or wrong?
Yeah.
Yes? Yeah. Now, this is your gross profit less all expenses. let's say I'll just be clear to you. Operating, administration, selling expenses. So let's say that is $100. So what I get, $300. Can I say that is my operating profit or PBIT or EBIT, whatever you want, you can say. Correct? Hello.
Yeah, yeah.
So from gross profit, I have deducted operating, administration, and selling expenses. These are the expenses which I incur not on my prime or core activity, but these are the expenses which I incur as an exception to those activities. That means, like the expenses which I incur from my prime activities, I take that under this. Now, after getting gross profit, whatever the indirect nature expenses, indirect nature. What do you mean by indirect nature expenses? These are the expenses which I am not incurring on my prime activity or manufacturing, but I am incurring these expenses to support my prime activity, to support my manufacturing process. Correct or wrong?
Yeah.
See,
So any expenses which is happening
which is
in that
which you are incurring to
business.
support your prime
Yeah.
activities, indirect nature expenses. Okay,
Yeah.
that's what. Those are also called as overheads. What are they called?
Overheads.
Overheads. Madam, are you following? Hello.
Yes, sir.
This
Yes,
is
sir.
this is related to the same business which I am doing it, and I'm showing also I'm deducting my operating admin expenses from my gross profit. That
Yes.
is giving me operating profit.
Profit. Yes. Yes. Okay. Now, so you can note this format. Say income. I'll write it neatly. Okay. You write on this form.
So you will also explain the term EBIT. It's the same
I'll explain everything.
on
Yeah, your operating profit is called as EBIT or PBIT. All are same.
on before income tax.
Yes, yes.
So do we have any kind of questions like you have to calculate EBIT?
Everything I'll be giving. I have many questions.
EBIT is profit before income tax.
Everything is same. Either you say earning,
Okay.
either you say profit, either you say operating profit.
Okay.
Okay, till here it's okay. Shall we move forward?
Okay.
So now, so you add your non-operating incomes to this, subtract non-operating expenses. Okay. So what do you mean by non-operating incomes? Incomes which you do not earn from your business operations, like dividend received, like interest received. So dividend you receive from shares or stocks, correct? Interest you receive from bonds. Do you think? Do you think these two are these two, you are involved in in these activities? Do you think you are into share business or bond selling business? Do you think you are into? I spoke about
Hmm.
manufacturing, correct?
Yeah.
For the factories or companies which are into manufacturing, whatever surplus they earn, they try to reinvest them, and when they reinvest, they get incomes in these forms. Okay, so these are called non-operating incomes. One more income I can say, profit on sale of asset. Side by side, you can write down these points also by making an arrow mark. So non-operating expenses incomes examples are dividend received, which is nothing but when you invest in stocks or shares, company pays you a part of profit or some part of profit as dividends to you. Correct? Then if you hold bonds, you get interest from those bonds because that company has borrowed money from you and given you a security in form of bonds. So they pay you interest. And then if you have some asset you are holding since long period of time, which is of no use to you right now, that means that much you don't have that proper like productive usage of that. So you will try to sell it, and if you get some profit from that, it's called profit on sale of asset. So that also is a part of this. Okay, just write on this one.
So this all income, sir. This is not related to the manufacturing what we are doing, but
Yeah,
this is
not
apart
this.
from that
Apart from that, yes,
income.
yes, yes.
But it's related to the same company.
Yeah, of course,
Yeah.
same company, of course.
Okay.
Yeah. Now, uh, then comes non-operating expenses. So I'll take this $100. Non-operating expenses are nothing but interest paid, loss on sale of asset, finance charges. So these are non-operating expenses, okay, but not dividend paid. See, dividend payment is not an expenditure for the business or company, any day, any time. Understood?
Why, sir?
You should tell me why. Think. See, dividend is not an expenditure for the business. It is a part of profit to be paid to shareholders, and that can be paid only when
Okay.
we get profits in the business, correct?
Correct.
And you
It's
get
a
profit after deducting all the expenses.
proportion
Okay?
divided.
You get the profits after meeting all the obligations of business. That means after meeting all the manufacturing expenses, okay, uh, like that is direct expense of your business, meeting all the indirect expenses, tax to the government, finance charges. After deducting everything, the end result what you get is profit. And suppose your profit is $100 and company has declared a dividend of 20%, let's say. So $20 of this would be deducted from profits. But when? After you get the profits, correct? So are you showing
Yeah.
this as an expense before?
No.
No, you are just deducting it from the profit and paying it to shareholders, distributing it to shareholders. And $80 you are retaining in your business, which you will be reinvesting, correct? This is the structure. So that's the reason why dividend paid is never an expense. It's a part of profit. That's it. These are all non-operating expenses because paying interest on loans is not your business operation. Okay, you're not a banking business whereby you whereby you get interest and you pay interest. No, this is a separate activity, a finance activity whereby you are paying money to banks for taking loans. It's not a part of your operating activity, correct? So now altogether, if I take this $50, so my net profit, let's say PBT, I will be getting. So 300, 400, 350, less tax 150, 200 is my PAT, profit after tax. I know I'm not writing neatly these things, but please try to understand and write now. I'll give a neat format down.
Yeah, operating profit 300 plus non-operating income, that is 400 minus 50, 350. Okay. Then 350 minus the
Tax 150.
150, and 150 was
Tax.
tax. Okay. $200. Tax. Okay. Okay.
Anything else? Any doubts in this? Clear, no?
Sir,
Yeah,
loss and
it's
sale of asset, it is considered non-operating expenses.
Which one,
Is it
madam?
loss and sale of asset? It is non-operating expenses.
Yeah, of course. Non-operating expense. I wrote it, madam.
what would be indirect expenses, sir?
That's what I said. The expenses which are not incurred
Related to the
manufacturing or prime activity. Yeah.
Okay.
But the expenses which you are incurring to support the prime activity is indirect expenses.
Tax, EBIT,
Yeah.
profit after tax.
Copy.
This is the neat format.
Yeah.
If you wish to write, you can write down. I'll move forward. No, nothing but we have to find out the operating profit. So it's operating profit by net sales into 100. So like let's now take a small example. Suppose your revenue is $1,000. Gross profit is $200. So your gross profit ratio is how much? 20%, correct?
20%.
Isn't it so? Gross profit by net sales. 200 by 1000 is how much? 20.
20.
Yeah. 200 by 1000 is
20.
yeah, 200. So you see this, and 20%, and then operating profit. Let's say it is $100. So it is like 10%. And suppose say your profit after taxes, let's say $50. It is 5%. Okay. So you see the refinement. Gross profit ratio 20%. Operating profit ratio 10%. Net profit ratio 5%.
5%.
Correct. Now my question to you is, are you satisfied with these profits? Are you satisfied with this? My question, simple question. Are you satisfied with these profits? Come on, very simple question.
Yes, sir. We can calculate
Yes.
only
Yeah.
profit, sir.
Yes, then why?
Yeah.
No, then why? To me, both are important. See, there is no satisfaction level for profits in the world.
Yes.
Never, never. A businessman, if I say 20%, then the question comes, why not 25? If I say 25, then the question comes, why not 30? So there's no limit to this. It's a never-ending debate. But that's the reason why we say, when you speak about profits, it's not a absolute measure. It is a relative measure. Okay? Now, what do you mean by this relative measure? That means when compared to previous year, suppose previous year your gross profit was 10%. This year it is 20. Previous year your operating profit was 10%. This year operating profit is 20. Previous year net profit was 5. This year net profit is 30%. Now you tell me which is better. This is better.
Second one, sir.
That's one. Yes. That's the reason why I said it's a operating. It's a like a relative measure. Okay.
Based on previous.
Yes. Just compare and see.
Yeah, compare.
Yes. Yes. So the entire concept regarding these three ratios are done. We'll see more two to three ratios we'll try to cover up. Yeah. Let's say now return on equity. So what is meant by return on equity? First, let's say this is a car. You bought it for 10 lakhs. Okay. But you paid 2 lakhs for this. 8 lakhs you have taken a loan. So this 2 lakhs is what? Equity. 8 lakhs is what? Debt. Did I give the same example previously? Anytime? Did I give you this car example? No. So what I mean here is 10 lakhs is the price of a car. Okay. And you bought this car and you're very happy. And you came home and your friend asks you, like you bought this car for how much? You said, my car is of 10 lakh rupees. And then he asks, or he or she asks you a question. You own this entire car or like some portion or part of this car? Like you own some part of this. The instant answer would be, yeah, I paid 2 lakh rupees for this car. That much what is my share in this car right now. So what I mean to say here is, you own 2 lakh rupees or 20% worth of this car, not the entire 100%, correct? Because the 80% has been funded or financed by the bank. So the loan which you have taken is debt. The investment what you have put is nothing but equity, correct?
Right.
And you see the accounting equation also, equity is equal to asset minus liability. So asset is 10 lakhs, liability is 8 lakhs, equity is 2 lakhs, correct? That's understood, very simple. Now, if you want to find out what you have got from your investment, okay, suppose you invested $100, you bought a share for $100, and the profit was what company has made is $10. So your return on equity is how much? On $1 of investment you made 10 cents, correct or wrong? Yes or no? Yes.
Yeah.
That means if you just subtract into 100, if you do, so like 1, then you get 10. That means 10% is your profit. That means $100 ka 10% is how much?
1%.
$100 ka 10% is $10. $1 ka 10% is 10 cents. So on an investment of $1, you make 10 cents, correct?
Yeah.
Is it good or bad? Again, this is a relative measure. How? If previous year you made $1, on $1 you made 8 cents. This year on $1 if you make 10 cents, this is a better year. Isn't it so?
True.
Just write on this formula. What's done, please inform.
Done.
Yeah.
So
Equity income means it is net income, sir.
Madam, just a second, madam. Just a second. I'm getting called. Just a second.
Okay. Formula is this, no? 10 above 100 into 100.
Hello. Yeah, tell me, Suma.
Yeah, this is the formula 10 above 100 into 100. This is the formula for return on equity. Right?
Yes, sir. Yes, sir. For $1, we made 10 cents. Sir.
Yeah, so income is 10.
You done the problem, Suma, yesterday?
I have calculated only quick ratio
Okay.
and current ratio because while doing the problems, I was not able to figure it out. I was watching the video from my mobile, so it was like making me confused.
Okay.
Couldn't use the calculator and all. So I have done only 4 problems for current ratio and quick ratio.
Okay.
Cash ratio, I need to try to solve it.
There is cash ratio and working capital also is same. But
Were you able to
working
solve
capital
it?
ratio also. Yes, I solved 20 problems.
To solve 20 problems. Okay.
Yeah, 19th one I didn't get that one. So,
So you solved all the problems.
and only 20. There are so many problems are there. I think 50 problems are there. But I saw only 20 problems.
Okay. So related to quick ratio or related to?
Related to quick cash and working capital also.
Okay. Okay, sir.
Okay, sir.
So Kalyani, whenever you're doing some kind of homework, you can also coordinate with me because if I need any help or understanding the concept later on.
Yeah, sure.
Hello.
Yes, sir.
Yes, sir.
Finished? Done? Shall we move forward?
Yeah.
Now return on common equity. Okay. Return on common equity is what? Now see, if I speak about equity, there are 2 types of equity. One is common equity, one is liquid equity. Correct?
Yes.
That means one is common shares, one is preference shares, of course.
Yes.
So here when I spoke about equity, I spoke about spoke about both the capitals. Whether I have common, that is normal equity shares, whether I have preference shares. I did not differentiate in that. Correct? Hello.
Yes, sir.
Yeah.
But if I filter this equity and remove this preferred equity, I get what?
Common equity.
Understood fact. Very simple. Okay. That means I am purifying it. I am refining it. Removing the preferred equity and only seeing from the perspective of common shareholders or common equity. That means this is the equity shareholders of the company who want to know how much on their investment they are getting the returns. Very simple. 1,20,000 1,20,000 is the net income of company. From that I will remove the preferred dividends because to preference shareholders we have to pay dividends before the equity shareholders. That's a rule. That's under company's law. As per company law, the first preference should be given to preference shareholders. Then whatever is left over will be shared amongst the actual owners of the company who are nothing but the equity shareholders. Okay. So now from the net profit of the company or net income of the company, I have removed the preference share dividends. Then like I am dividing that amongst like suppose my common equity of my business is 10 lakhs. Okay, that's a capital. Fine, only common equity. Now 1 lakh divided by 10 lakhs into 100. So again on $1 how much returns they are making? 10 cents. Is it right or wrong? Is it right?
Yeah. Yeah.
On $1 how many cents? 10 cents, correct? So the only difference between normal equity and common equity is this is a combination of 2 types of capitals, that is equity share capital and preference share capital. This is only equity share capital. Okay. Now please make a note of this and then you work out this question. I'll give you 2 minutes.
Sir, in the examination, they will give only equity and then we
They'll
can
give the data.
confirm as formula or preference.
Yeah, they'll give the data. Once you have noted it down, let me know. Right. Okay, have you finished?
Yeah.
Okay, then do this question. I think you're doing the question. See, what you need to do, you need to take earning before interest and tax. Okay, remove this interest, you get EBT.
EBT.
That is 12 lakhs. Okay, 17 lakhs minus 5 lakhs is 12 lakhs. Of that 12 lakhs, what you're getting, minus 40% of that, that is 4.8 lakhs. So, what is your profit? 12 lakhs ka 4% is how much? 4.8, correct?
Yes, sir.
So you will be getting how much? 7,20,000 is your profit. Net income we got. Of return on equity they're asking. Now your problem is, where is this equity? Where is this equity? Where is this equity? Not given. So you know one thing, correct? From your asset minus liability, you get what?
Equity.
Asset minus liability, you get what? Equity, correct? So
Right.
find out this value, find out this value, add both of them and divide by 2, you get average common equity, correct?
Okay.
That's what the formula says. If you have 2 years data, if you have 2 years data, they are looking for average equity. So when there is 2 years data, you should go for average equity. So now net income is 7,20,000 divided by this minus this will give you the beginning year equity, that is equity 1, plus this and this difference will give you end year equity, that is equity 2, whole divided by 2. And then you divide and tell me the answer. I'm waiting for your answer.
7.2.
Sorry?
7.2. Average is 1 lakh, sir. 34 lakhs minus 32 lakhs.
So you get 32 lakhs here.
Yes.
Here you get 96
34.
minus 60, 34 lakhs. 34 plus 32 divided by 2 is 33.
0.21.
7.2 by 33.
0.
Yeah, into 100, like 21.8%. That's like 22.
Yes, 21.82, sir.
Yes, done. So today we have covered 5 ratios. Like again, you can watch this video and no work today, okay? As of, because more some ratios are there. I'll just try to send you gross profit, net profit ratios PDF within some time. Start working out on that, okay?
Okay.
Okay.
And also on return on equity and return on common equity. These 5 ratios, work out these questions. Fine.
Okay.
See
You're
you on
giving
Monday.
some questions, sir?
Yeah,
For
I'm
that?
sending you questions.
Okay.
Right? Sending.
Okay.
PDF. I'm sending you PDF file.
Okay.
Okay, because I
Okay.
only have 5 minutes, so I thought like if I start questions again, I'm having some session. So if I
All
give you
right.
PDF, you can try, or else Monday we can collectively do some questions. Okay.
Yeah. Yes, sir. I will do the same problem again.
Yes,
The one
please.
which was shared. Yeah, couldn't do.
Thank you.
Okay.